What's up, everyone? Welcome back to Gen B. I'm your host, Zoomer Cincy. Apologies if my voice sounds a little weird today. I'm a little under the weather, but I haven't put anything out this week yet, so I'm a man of the people. Got to put something out. Today, I'm just going to be talking about what's been going on in the Bitcoin market recently. I do want to make this channel about more than just Bitcoin, but there's a lot going on right now, and there's stuff that I'm looking at specifically in this market. So I thought I'd just share my thoughts. It's been a pretty crazy week. Bitcoin's making huge moves to the downside, and I've got some thoughts. I've got some thoughts on Bitcoin. I've got some thoughts on gold. I've got some thoughts on MicroStrategy, and I'm just going to put them all out there. So let's get into it. I wanted to start with this chart. This is a 10-year chart of Bitcoin priced in gold. You can see we started out the decade back in 2016 at about a third of an ounce per Bitcoin. And we had that huge run back in 2020 and 2021, which peaked at about 36.25 ounces of gold per Bitcoin. And then we had the bear market. The chart looks, prior to the past 2 years, the chart looks really similar to a chart denominated in dollars. But I think that it's useful looking at different assets priced in gold or priced in Bitcoin, because those are harder assets, and gold has proven itself over the past several thousand years to be a good store of value. And if you measure things in gold, you'll typically see a more accurate representation of the real purchasing power of something. If you price something in dollars, you're not actually seeing a representation of the purchasing power because of inflation, because they're printing more dollars. And it would be like if you measured something in inches, but they kept adding inches to a foot. So like if you were 6 feet 1 year, but then the next year you're 7 feet, but you actually haven't grown, that would be like pricing something in dollars because there's more dollars. So the same thing requires more dollars. So I like to look at things in gold. Even though gold does increase in supply, it usually increases between 1% and 2% per year. So it's pretty muted. And so you'll see a better reflection of purchasing power of things in gold. And I believe Bitcoin as well, but Bitcoin is a very new, young asset, and it's very volatile, and it's up thousands of percent in the past 17 years or however long Bitcoin's been around. And so everything just looks like it's going down in Bitcoin terms, which I think will be the case for a long time. But if you just want a more consistent purchasing power chart, I like gold. So here I'm looking at Bitcoin and gold, and over the past few years, you can see we barely took out that high of, where were we? 36 and a quarter ounces of gold, and we just touched 40 ounces of gold back in 2024, actually, was the high priced in gold. And even though the Bitcoin in dollar terms was going up a lot after December of 2024, you actually had the gold price go on a major run as well, which contributed to this. And that's a good reflection of the printing of money over the last 10 years as well. Gold is reflecting that, and so you can see that in the Bitcoin price chart as well. And you can see we've had a very, very violent sell-off in gold terms, and we're actually near the bottom of the 2022 market. So back in 2022, in December, it was about $16,000 per Bitcoin, and that got you about 9 ounces of gold per Bitcoin. And as you can see now, we're just above 10. We bottomed probably around 12 ounces of gold, and right now we're at 13.7 ounces of gold per Bitcoin. So you can see we're down a lot more, a bigger percent drop in gold terms than in dollar terms. And that's because gold is going up in value, but it's relatively keeping its purchasing power over the last 10 years. So when I look at this chart, I see opportunity because gold and Bitcoin are very comparable. They're both considered to be sound monies, hard assets, but Bitcoin beats gold on almost every metric when it comes to its monetary properties. It's easier to divide. It's more fungible than gold. It's easier to verify Bitcoin than it is to verify gold that it's real. You can send Bitcoin anywhere around the world at the speed of light, and you get final settlement in anywhere from 20 minutes to an hour. Whereas with gold, you're sending ships, and you're sending military to guard large amounts of gold transfers between countries. It's very expensive. It takes a lot of time. It's hard to verify. And Bitcoin beats gold at all of those properties. And Bitcoin is actually the first truly capped supply monetary asset in human history. And even gold doesn't have a supply cap. It's technically infinite. It's a naturally occurring element in space. And there is a ton of gold still on Earth that we haven't dug up, and there's technically an infinite amount of gold in space. An asteroid could hit Earth tomorrow with an infinite amount of gold. We could literally double the above ground supply at any time. If it just literally, that's just possible. And with Bitcoin, it's mathematically provable that there will only ever be 21 million Bitcoin. And so I like to compare these two assets against each other, because I think when Bitcoin's down in gold terms, it's actually opportunity, because I believe that Bitcoin is superior in almost every way to gold. And so I've been looking at this chart. Again, you have to remember that this chart could resolve itself to the upside by gold going down and Bitcoin staying the same price in dollar terms. So just because this chart could revert doesn't mean that Bitcoin's pumping. It could actually mean that gold's crashing and Bitcoin is just not crashing with it. But regardless, I still think there's huge opportunity in the Bitcoin market, and that's very evident if you look at it priced in gold. One thing you get during these price drops is a lot of people spreading FUD on the internet. And one of the things that they have been talking about, people that don't understand Bitcoin, is that miners are not profitable. It costs more in electricity and mining equipment to mine a Bitcoin than you get now from actually mining a block, because the price has gone down. And I'd just like to dispel that FUD, that fear, uncertainty, and doubt. As you can see, I'll back up. First of all, Bitcoin, the network, has something called the difficulty adjustment. So the cost to mine, regardless of your energy price, is mostly driven by the block difficulty. And the block difficulty changes every 2,000 blocks. I can't remember the exact amount of blocks. It's around 2,000 blocks. And basically what that means is if there are more miners online and blocks are coming in faster than 10 minutes, then the network will adjust. It'll be harder to find a block, which means it'll be more expensive. And if the price to mine goes way too high and miners don't think that it's worth it for them to be mining anymore, securing the network, then they'll go offline. The difficulty will automatically go down and it'll become cheaper to mine Bitcoin, and that incentivizes miners to come back onto the network. So there really isn't like this whole death spiral thing where people say, oh, miners will come off the network and then the value of Bitcoin will go down and then more miners will come off the network. That's literally why the difficulty adjustment, well, it's one of the reasons why the difficulty adjustment exists, is to incentivize miners to come back onto the market and secure the network. And as you can see, we had a huge downward adjustment earlier this week, and you can see in just over a week we're actually projected to go right back up in difficulty because miners came back online, even though it was not as profitable for a lot of miners to mine. In the last couple weeks, as Bitcoin's been going down, as soon as we had a large adjustment downwards, which made it cheaper to mine, you can see miners came right back online, and we're in line to get a pretty big upward adjustment here in just about 9 days. So that's something I'm looking at, and it's definitely not something I'm concerned about. It's just something I wanted to mention. So if you believe in Bitcoin, I do believe MicroStrategy is an interesting company. This company, their sole purpose is to increase as much Bitcoin is to own as much Bitcoin as possible and to increase the amount of Bitcoin per share as much as they can. And this is probably the most misunderstood company in the entire stock market. And I think there's huge opportunity here. It's hated by everyone. There's a very small group of people that like this company. It's hated by people that don't like Bitcoin. It's hated by people that do like Bitcoin. And I believe it's completely misunderstood. The way this company used to finance its Bitcoin purchases was solely through the issuance of common stock, and also through some convertible notes. They eventually stopped issuing the convertible notes, and for a while there, they were only issuing common stock. And the way that was beneficial for the shareholder, even though that they were technically diluting the amount of MSTR shares on the market, was that when the company traded at a market cap higher than the amount of Bitcoin they had on their balance sheet, they could sell common shares and buy Bitcoin with the proceeds, and that would actually increase the amount of Bitcoin exposure per common stock share, even though they were selling shares to do it. So if just for example, there was 1 Bitcoin per share prior to MSTR selling a lot of common stock, they sold common stock, bought Bitcoin, and then there was 1.1 Bitcoin per share on the balance sheet, even though the amount of shares actually increased in nominal terms. And now they actually have preferred equities. So instead of only selling the common equity, they have preferred equities that pay dividends. And essentially what they're doing here is stripping out the volatility of Bitcoin and even from the common stock. The common stock is typically more volatile than Bitcoin. It kind of just trades like a leveraged Bitcoin position, even though the company is insanely overcapitalized, and it's not like buying a 2x or 3x Bitcoin ETF or something like that, where you have decay and everything like that. Like this company is increasing Bitcoin per share over time. That's this chart here. And if we even just go back to the peaks, so back in November of 2024, MicroStrategy was at $420. And back then in, Q4 of 2024, they held 226,000 total Bitcoin on the balance sheet. So the company owned 226,000 Bitcoin. And in Q4 of 2024, the Bitcoin per share was 158,000 Satoshis per share. And now, so it was at $420 then. Now it's at $133, but the company now owns 714,000 Bitcoin. So it over tripled its total Bitcoin per share, or total Bitcoin. And it went from 158,000 sats per share to 195,000 sats per share. So the company has over tripled the value on its balance sheet. It's up, what's 150 to 195? What is that? That's like 20%, 25% increase to the Bitcoin per share. So by every metric, the shares are more valuable in Bitcoin terms. But if you look at a dollar price of the company, it's down how much? Almost 70% from then. So if you're someone who believes in Bitcoin and you believe in governments being irresponsible, printing money, this to me is a huge opportunity. And you combine that with the fact that it's extremely hated, and the sentiment is, I've never seen the sentiment as low as it is now for this company. It's just a huge opportunity, in my opinion. It's a huge opportunity. If you believe that they can continue to increase Bitcoin per share, it's looking really juicy, in my opinion. Again, that's not financial advice. Do your own research before you make any type of investment or financial decision. But these are the things that I'm looking at right now. I think we are really looking dead in the eyes of some big opportunities. And in hindsight, it'll be a lot clearer. It's always harder to see in the middle of the storm. But these are just things I'm looking at and thinking about right now. Sorry if I was a little scatterbrained all over the place. Feeling a little sick, but I wanted to just put something out this week. Show you what I'm looking at. I thought that the Bitcoin price in gold's a cool chart. And I wanted to talk a little bit about mining. I'm not concerned about the miners. And I wanted to talk about a really hated equity in the markets. Like, I seriously, like, everyone hates MicroStrategy, and I don't really know why. I think it's just really misunderstood. None of the debt is secured with the Bitcoin. The Bitcoin's not leaving the balance sheet. They could withstand a 90% drawdown in the Bitcoin. They have over 2 years of cash on the balance sheet for all their dividends. So Bitcoin could go to zero and they could service the dividends of all the preferred equities for over 2 years still. So like this, I mean, I just don't understand why people don't like this company. Seriously, I think it's just a lack of education. But yeah, that's what I'm looking at. I'll see you guys next week. I'll bring you a new episode and hopefully I'm feeling better. So thanks everyone. See you later.